Ready?
Okay, that is it recording, Sharon. So whenever you are ready, you can go ahead.
Okay. First, it's lovely to be here and to thank Pauline for the opportunity just to talk to you about the startup loan and to maybe share the importance of it and to encourage you and maybe help you feel more comfortable and confident when you're engaging with your clients who potentially will be looking for funding to start up their business, to empower you to guide them maybe in the application process and make it easier for them, and to support us as lenders to secure the important funds that your clients need to start a business, which will impact the economy. And in turn, if we're successful, you will get the opportunity to mentor those clients as well. And that in turn will help us achieve our targets. I would like this presentation to be very interactive. I would welcome questions. There is a brief presentation which I'll walk through with you, but I think the most important element is the helpful tips which I'm going to share with you that Ian and I look at, or how we address applications for the Startup Loan Fund. So as I say, I'm not sure how you'll field those questions, Pauline, whether the people want to put up messages or if they want to put their hand up and we can let them in. But just basically, this is a brief startup. Startup Loans is promoted by the British Business Bank. All right. Pauline, please. Uh, it's a government-backed personal loan for business purposes that is available to individuals looking to start or grow a business in the UK. And in the UK is important, okay? And it is, in addition to the loan, successful applicants receive 12 months of free mentoring and exclusive business offers to help them succeed. So the 12 months of free mentoring is something that really should interest you, because normally our enterprise agencies are afforded the opportunity to mentor the clients that are successful. The loan is unsecured, so there's no need to put forward any assets or guarantees to support an application. And for those of you who are familiar with banking or banking backgrounds, you'll know you rarely get a loan without a guarantee or security. And this is a non-secured loan. So that's very attractive. Now, all owners or partners in the business can individually apply for up to 25,000 each, with the maximum of 100,000 available for business. Now, that's an important fact. So if you have a business, maybe there's 5 partners in the business, each of them can apply for 20,000, but it's a personal loan, a maximum of 25,000, but it is for business purposes. So I think that's important to remember, please. Pauline, moving swiftly on. Thank you. So you can borrow between 500 and 25,000. Now that suggests that the average loan amount is 7,200. I think that's maybe out of date. It's about 12 or 14,000. But if you need 25 and you can justify 25, we will lend you 25. Fixed interest rate of 6% per annum, 6.1%, that's because there's no fees. That's actually a very good rate, because if you were again going in to look for a personal loan in a bank, you could be charged 14, 15%. The repayment terms are between 1 and 5 years. And if you're looking at an application, I would encourage you to go for the 5 years, because you can always pay off that loan early and there's no fees to do that. So there's no setup fees, and it's a free application support, including access to business planning, templates and guides. Now, just there is a template, there is a business plan, and there is a cash flow on the application. I don't like it. It doesn't give us the information we need. I have to stress, I love the Go For It. The current Go For It program is brilliant. And that's why we're doing this today, to encourage you, because you are such a support to us when making the decisions. Or Go For It is excellent. You think I'm getting commission here, Polly? I'll pick it up later. But you know, sometimes when we get applications in from our clients, they've done the plan themselves, they've done the cash flow. I have to say it's not very good, and we usually signpost it to that central number to get some of yourselves to prepare a plan. So bear in mind, we really value in that end. So it's a free post-loan support and mentoring. I'm not just sure what that means, but the bottom line is, if we're successful with a client, we usually signpost them to yourselves to secure that mentoring, which I'm not sure what the reward is for that, but it's 12, I think it's 12 hours free mentoring. It's either 12 or 15 hours free mentoring through yourselves. Thank you, Pauline. So to be eligible, you must fit the following criteria. You have to be 18 years or over, current UK resident. For those who are in border areas, that's important. We've had people from the Republic of Ireland apply, but their business must be in Northern Ireland. The revenue stream has to come into Northern Ireland, and they have to prove that their business is here. You're starting a new business or have been trading for up to 3 years. Now, I know the Go For It really only deal with businesses who are less than 6 months old, but that might be an opportunity for your agencies to tap into that market for people who need support. Excuse me. Now, sorry, you have been unable to secure finance from other sources. This is very important. We are a loan of last resort. That means you must have applied to your bank, your financial institution, and asked them for the money. And the reason behind that there is the British Business Bank is not in competition with the normal banking institutions here in Northern Ireland. So if you're dealing with a client, explain that to them, and I'll go into that in more detail in the useful tips. They can self-declare that they have spoken to their bank, and I would certainly encourage them not to go through a credit check with their bank. If they felt that the bank wasn't going to lend them the money, just tell them we're not funding new businesses, and that's where we get a lot of response. Banks are not lending money unless you've got the money there to borrow yourself, and that's the reality of it. Just banks are going through a huge cultural change. So that's an important fact, and again, I'll pick it up in the tips. Your business has to be based in the UK, and you have the right to work in the UK. We have a lot of Europeans who maybe haven't applied for the right to remain in the UK. The Startup Loan Fund are now asking for evidence that they have the right to remain in the UK to be able to work. So for those who are dealing with the international community, that's very important. Republic of Ireland is not an issue, but certainly the Europeans, one in Europe or Syria or whatever, we need documentary evidence to say that they can remain here. Your business type and loan purpose must be eligible under the terms of the scheme, and that's working capital, that's equipment, but there's certainly a few areas that we've come across in recent months. People want to do adaptations to their own homes. That is not acceptable, but we can talk more in a one-to-one as you come across those scenarios. And you must pass our credit check and be able to afford to repay the loan. That's very important. When you apply for a loan through the system, it will automatically do a credit check. You're given permission for that credit check. The results of that credit check is beyond your control and our control, and that's very much between the client and the credit check itself. We don't know anybody's past credit. They could have been bankrupt. They could have been making repayments under various scheme or whatever. Unless you're told about that, you won't know that when you're doing the business plan. Thank you, Pauline. So Enterprise Northern Ireland are the official startup loans delivery partner in Northern Ireland. Ian and myself are in the team here in Limavady. And just to say it now, we're more than willing to talk to you, support you, help you, whatever you need. If you're working with a client and you have any concerns or questions, please pick up the phone. There are a number of people throughout the various agencies that do, and we have great success with them. So we want to extend that invitation to everyone that's both on the system here today and those that are viewing the recording later. I think Pauline has put up our details at the end of this, but we want to help develop the business plan and financial forecast. That's where you come in. And as I say, the Go For It is a terrific tool that we encourage anybody that applies to the startup loan that doesn't necessarily go through yourselves, we do signpost them to yourselves, guide them through the application process. As I said earlier, this is the purpose of this webinar, is to enable you to understand what we look for so that you're confident when you're talking to your client. Assess the application, that's what we do, but we're willing to discuss that with you if you have any concerns, whether they're eligible or they're not eligible, or how they're best approach their application. And if successful, provide our clients with the mentor to support the client as they develop their business. And again, that's where you come in. Sorry, this screen here is probably for the applicant of the loan, but you can see where they're coming from. You're very much a part of our team here, and we rely on you, and hopefully we can support you in return. So just to summarize, loans are strictly for 18s and over. Personal loan for business purposes. So if a business comes in and says, my business wants to borrow the money, it's actually, the loan is to the person. They will invest it into the business, but it's the person that we look to repay the loan. Finance is subject to status, terms and conditions do apply. All right, I think there may be a video now. Pauline, is it? Yeah, so if we watch this video, then I'll maybe elaborate on the helpful tips, and folks very willing to answer any questions as we go along. As I say, put up your hand and maybe Pauline can, I'll open up your mic to allow you to ask that question. Thank you, Pauline.
I'm just going to see, can you tell me if you can hear the can you hear that, Sharon? No?
No.
No. On to our first technical hitch. Seconds. Sorry, everybody, I'm just...
Glad you're doing it, Pauline.
But I can't remember how you turn it on. If anybody can help me, how you turn it on that you can hear the videos. There's something you have to...
I don't know. I just had it yesterday, that wee arrow. Yesterday, if you go back.
That I have to set it up that attendees can hear.
Okay, sorry.
And I can't remember how to do it.
Pauline,
Yeah.
I think, now don't quote me, but if you unshare and then share again and tick allow sound.
I think you're right, actually. Is that why I couldn't? Hold on now then. It's in the share option. You're right. Oh, thank you. He was to help me there. Sorry.
Keelan.
Keelan, thank you so much. Oh, the panic was setting in there.
You'll have your reward in the post.
Okay, so hopefully this should work now.
Business ideas can spring up from almost anywhere. It might be a eureka moment, a chance conversation, or it might be the realization that your hobby could make you money. After hand-making her own clothes and constantly being asked where she bought them, Anna decided her passion could be her career. She just needed the funding to get her business off the ground. And that's where Startup Loans came in, with Anna able to apply for a loan of up to £25,000 to start her business. The application process is simple, with applicants asked for basic personal details and permission to run a credit check to get things moving. Once you've successfully passed our credit check, you'll be able to complete your application, entering important details about your business. Anna used some of the free guides and templates on the Startup Loans site, as well as support from a business advisor to pull together all of the simple business information she needed. This included her business plan, cash flow forecast, and personal survival budget. We use these documents to assess whether your business is viable and whether you can afford the loan. If you need help with those, just speak to us. There you saw how our advisor deemed Anna as having a viable business. You also saw Anna say she'd use the funding to build a website and start a marketing campaign to attract more customers and make her dream business a reality. Anna's preparation gave her a better chance of succeeding with her application. But it wasn't just a loan she received. She was also offered 12 months of free mentoring with an experienced business advisor. Anna's mentor answered any questions she had about the challenges her business faced and helped keep her venture moving forward. So why not get started and use startup loans to make your business dream a reality today?
Okay, I'm assuming you all heard that because nobody didn't tell me otherwise. Was that right? Didn't Sharon?
Yeah, it was a grand 100%, Pauline. Somebody did present a question there about a self-catering business. Yeah, that is a very grey area. I can't, the question went off screen. I don't know, do you have a record of it, Pauline, there?
Hold on. There's a couple of questions here.
Well, maybe I'll go through the tips and then we'll address the questions if that's okay.
Yeah.
Okay. And folks, there's our contact details, and really encourage you, lift up the phone, drop us a wee email. If you have a client coming in that you know that's going to be looking for a loan, if you want to know how to approach it or whether they're eligible or not eligible, just lift the phone. If we don't know, we will find out. We'll go straight to the powers in the UK and they'll be able hopefully to guide us. But there are a few grey areas, I know that, and sometimes it depends how the application is presented, and I'll give you a few examples of that as we move along this these hot helpful tips. I was going to say hot tips, but Ian and myself are more than willing to talk you through any proposition, guide you, help you, support you, do whatever you need. But if we could look at the helpful tips, I think Jarlath's coming on in a few minutes, Pauline, so if I can walk through that before Jarlath comes in, that would be great.
Yeah, I'm going to share this. The screen, because it mightn't be, I'm going to zoom it up.
Okay.
To see how we get on, but these will be made available after this presentation anyway, so don't be panicking too much if
I'll walk through them, and you know what, folks, I can email them to you, print them out, whatever. And in fact, this is something that Ian and I have drawn up ourselves. It's not an official startup loan document. I want to stress that. But it's just something that Ian and I have found helpful when we're talking to even potential clients who are inquiring about loans, what we look for and what we need. And there's nothing secretive about it. It's pretty standard. As you know, when you're aware, the first application you can apply for up to 25,000 up to 5 years. This term has just changed fairly recently. Businesses may, you know, we've spoken before, businesses may be able to apply for up to 100,000, and that's a maximum 25 per person. Or if you have 5 people, 20,000 each. Has to be trading less than 3 years. It used to be 2 years up until last month. And applicants for a second loan must be trading less than 5 years. And if you're engaged with an applicant that you're familiar with that's come in for support, give us a ring and we'll tell you what we need to allow us progress an application. As I say, lift the phone. There's no secrets here. So as you can see yourself, all applicants will apply online through the website www.startuploans.uk. And hopefully, unless they're previous armed forces, they will, any applicant from Northern Ireland will be directed to ourselves. It is a loan of last resort, as I've said earlier. Therefore, the loan fund will require confirmation that applicants have applied to a mainstream lender and been rejected. And as I stress, when you're engaging with your clients, tell them, have a conversation with their bank so that they can legitimately confirm, yeah, I've spoken to my bank and they've said no. Now, I've heard of one situation with the bank that you need to do a credit check. Just walk away and just confirm that you've spoken to the bank there, because you don't want too many credit checks done before you apply. When there is a credit check done, there's usually 3 options. You can be a band 4, which is your good credit risk, and therefore we don't require a lot of information. You could be a band 2, which means you may have some sort of a checkered background and not, or maybe you've never had credit, and we will look into your application in greater detail, or you may just be rejected full stop. We don't know where the applicant doesn't know what band they're in. We are told the band they're in, but we don't know anything else other than the band, if that makes sense to you there. So, as I say, when you apply online, the system will allocate a number to us, and that depends on what information we require from that individual. If someone is rejected, I would encourage them to find out why they were rejected, and they can appeal that decision and possibly get their own credit check as well done through Experian or Expedia, because maybe they have had a phone or something that they haven't paid off, or some sort of credit in the past that they've forgot about, that it's easy just to, to correct. So just don't walk away or be disheartened if that is the case. Now, this is where you come in. All applicants should have a robust business plan and cash flow projection. As I shared with you earlier, the business plan and the cash flow that is promoted through the Startup Loan Fund themselves, to me, is not very good, to be honest with you. I love the Go For It. It's plain, it's simple, it just gives us the right information, and there's no extra. There's another program that maybe have been launched, and I've had the opportunity to see it. Too much information, whereas our current Go For It is just perfect. The cash flow, this is important, and I love our cash flow. It should demonstrate that the business is viable and has repayment capacity, even when stressed by 10%. And we've actually illustrated there what we look for. It's the trading profit, which is the net profit plus your depreciation plus your interest paid. And we stress that by 10 or 20%. We used to do it 20, and we've relaxed that a wee bit. We're taking 10% off that. And whatever that figure is, it should be adequate to meet the individual's drawings and the loan repayments. And if you can just keep a wee eye on that when you're doing someone's cash flow, do a ready reckoner there, because that's what we look for. We look at the cash flow, we look at the minimum balance, and in fact, when we are looking at the closing bank balance, say someone wants to borrow 20,000 and their first month's closing bank balance is 10,000, we'd be saying, well, why do you need that 20,000? Your cash flow doesn't demonstrate the need for that money. So we need to understand why that individual is borrowing the money and the amount, if that makes sense. This is a loan of last resort. There is a high demand, and we cannot throw out money to someone who can't display or can't demonstrate the need for it. Any questions on that, folks? Anybody, any queries? Do you understand where I'm coming from? No? Right, okay, hopefully. Personal CV. Why do we need a personal CV? Because this is a personal loan for business purposes. So if the business doesn't work out, what do we do? Well, if that individual is a professional or has had a good CV demonstrating a good sound work ethic or good qualifications, the chances are that they could pick up employment very quickly and that they could repay the loan. If someone has been unemployed all their life, and we say, and I'll hit the contingency plan in a few seconds, I'll get a job, we will sort of say, well, the CV doesn't demonstrate their ability to go out and seek employment. So this is why we look at a CV. So when you're talking to your client, a good CV demonstrating the period of employment, the reason we need that is to show if in a worst case scenario, they can secure employment or pick up another business. Why do we need a personal survival budget? Well, if someone's fully committed, the chances are if their business doesn't succeed, they don't have any spare resources to repay the loan. So say if someone is, say, a teacher and they want to do, and they want to undertake a new business, which is part-time, which they're going to combine with their profession, the chances are the income they get, their salary, less their expenses, there may be some surplus, which would in turn repay the loan if their business doesn't succeed. Now, I hope you understand that. So when we're looking at a personal survival budget, we're looking the income that that person is bringing in to their home. We're not interested in their spouse, their partner, or whatever. It's that individual and what personal expenses, fixed expenses they have. Do they have hire purchase? Do they have a mortgage, life cover, expenses that they need to pay? Now, if they're going out to the cinema every week or the pub, that's from their surplus funds. So it's important that they are as accurate as possible. And if they're a band 2, we will require 3 months consecutive bank statements, and we will cross-reference those bank statements against their personal survival budget. I had a client actually who was from Cookstown. He had a loan. He omitted it in his personal survival budget and had to bring the whole thing back to him and say, where's the loan that's on your bank statement? And folks, you won't have probably privy to their bank statements because it's personal, and why should you? But warn them. There's things we look for. Gambling seems to be quite a problem out there. There was a guy yesterday. He has spent on average £1,100 on gambling in the last 3 months. That averages out £4,000 a year. If he can afford to gamble £4,000 a year, he doesn't need a loan. And I've had to go back and say, give me 3 months clean bank statements with no evidence of gambling on your account. That's the startup loan policy. It's not our policy. The startup loan says, right, if there's evidence of heavy gambling, we can't touch them. Now, I invited that guy to withdraw his application as opposed to declining it, because if I declined it, that would have impacted his credit rating. So we work with the customers as well. We'll guide them, we'll signpost them, we'll encourage them to try to get their affairs in order so that they are in a better position to apply for a loan. So the most recent 3 months consecutive bank statements, now only upload those if we ask for them or if the system asks for them, because if we don't see them, we don't have to do a cross-reference against the personal survival budget. So see that note, only upload if requested online. I used to stipulate it, and then we were making work for ourselves. So personal investment, if I'm putting in £1,000, I will usually say, well, where is that evidence of that? Now, if they have a bank statement and they say, well, there it is in the bank, that's great. Or if they're band 4 and they're turning around and they say, well, I've spent it on a computer, there is a photograph of the computer. Depending on the overall proposition, we would accept that. And depending on the strength of their business plan, etc. If they're a band 2, we'd probably say, no, we need receipts for that. How do we know that's your computer? We'll just dig that wee bit deeper. But again, folks, feel free to talk to us what's acceptable, what's not acceptable. Now, quotes for any major capital expenditure. If someone was buying a piece of equipment, you can go online, get a screenshot and upload that. It's to give us an understanding of what you're spending the money on. If someone is getting someone to come in to refurbish their salon and they are engaging a builder, we would want a quote from that builder. We want to know what you're spending your money on, and we want that backed up with evidence. That's why we look for quotes, okay? Now, if they're buying a few bits and pieces, we're not that stringent. Now, sales, expressions of interest or evidence of sales secured to be uploaded. That's important, and you do under the Go For It have to substantiate 10% of your sales justification. We are now breaking that down. We're looking at what, say, if a beautician is turning over £1,000 a month, 250 a week, how are they generating that on a daily basis, say £50 a day? Does that break down to 2 clients? So we're actually looking at that in more detail. If someone has secured an order If someone has expressed an interest in the product or the purchase of whatever, it's useful to have a copy of those emails. And again, it depends on how much that client is looking for and the type of business. But the startup loan are really focusing in, and our auditors are focusing on, how do you know that they're going to turn over what they suggest? And please be realistic in the sales, because, as I say, if someone's going to do 200,000, we really will be challenging that. The other thing just is coming to mind, the loan repayments in the cash flow. Would you put it in the second month, not the first month? Because when you draw down a loan, it's usually 4 weeks before the first repayment is taken, and that in itself will help the cash flow at the end of the day. Now, again, evidence of address and ID. Sometimes, depending on the band, they ask for ID, address verification, and that's where the individual has to upload it. You won't know that. We're just told that they need evidence, and that evidence, sorry, thank you. So it could be a driving license. We need a coloured copy. We need the 2 sides. If it's a passport, we need the full passport. If it's a utility bill, it has to be current within the last 3 months. And again, it could be bank statements. And if it's bank statements, we need 3 months with the full address. We don't need a printout from the internet. It has to be an original bank statement. Now, I mentioned earlier the contingency plan and the CV. Our question to every individual is, should this business not perform and unable to make the loan repayments, how are you going to manage it? And that's where your CV comes into play, and that's where your personal survival budget comes into play. So we can demonstrate, if the business doesn't perform the way it should and is unable to make the repayments, we have a backup plan, or the client has a backup plan. And the worst thing we can do to anyone is lend someone money that they're not going to be able to repay, and it's going to impact their credit and their livelihoods, etc. So we don't throw out our loans willy-nilly. We want to be sure that it's the best thing for the individual. And that's, again, where you can support us by this robust business plan. But you can only do the business plan. They have to come forward with their personal scenario. Now, copy of lease. If you're leasing a premises and that lease is only for a year and your loan is for 5 years, at the end of that year, you could be thrown out of your premises. So you need to look very carefully at the lease, and we want to see the lease. We don't necessarily want it signed, but we want to see the lease, what is the terms and the conditions. And when we're looking at that lease, we're looking at what the rent is. Is that the rent that is reflected in the cash flow projections? Is it for a year? Do they have the option to renew? Now, we've had debates with the Startup Loan Fund about this. We don't want to encourage someone to take a 5-year lease to tie them into a premises if their business outgrows it. But what we would like to know is that they have the option to renew, and that they're not going to be thrown out at the end of the term, if that makes sense. All right. Now, evidence of council approval, planning permission, licenses. If they're a food van, they need to have applied for a license with the council. They need a trader's license. There's all sorts of licenses for various businesses, which you will have covered in your business plan. And if not, you should have. And we sometimes it's a catch-22. If you're buying a food truck, you won't get approval until you've bought the food truck, and you won't buy the food truck until we have given you the money. So again, we can be fairly relaxed on that, but we want to know that their health and hygiene certificates, etc. If people are doing Botox, are they licensed? Again, this is where you will be able to identify in your research under the various sections of your business plan. And we look at that, and we also research the internet ourselves. Now, business bank statements, if already traded, in the majority of your cases, that will be less than 6 months. So if they can give us, say someone's been trading for 3 months to support their sales, we would say, well, can you fire us in your business bank statements for those 3 months, so that we're able to cross-reference that against the cash flow projections. And again, a limited company, we will go on to Company House, we'll look at the full registration and see the officers who have significant control. Now, we had a situation, I think it was Dungannon, area, a solicitor. He had a 33% shareholding in the practice, and he wanted to borrow the money, but he couldn't without one of the other two coming forward, because we need the significant control element there. Again, any queries, just lift the phone, folks. And a partnership agreement is extremely important. If you have two individuals coming in who are setting up a business, even a husband and wife, we will look for a partnership agreement. Again, that can be uploaded from the internet, but it's important to stress the terms and conditions of the business, that if that partnership should dissolve, who's going to repay the loan? Now, that loan could be in one name, which is grand, but for their protection more so than our protection, they should have a partnership agreement. And if someone comes in, and again, we had a query like this last week, someone was purchasing an existing business and they were told it wasn't a new business. It is a new business to them. If I'm buying a business from someone, I'm taking over a business, that's my new business. But what we in the startup loan would want is a copy of the old business accounts to see what they're buying. Is there goodwill? Do they have a purchase agreement for the equipment, etc.? And we will insist on seeing that. But again, if you're involved in something like that, please lift the phone, and we're more than happy to explore it more on your behalf with the Startup Loan Fund if we're unclear ourselves as to the direction we can give. Folks, I'm willing to take questions now. I don't guarantee I'll be able to answer them all, but please fire away if anyone has one. Can you see them, Pauline?
Okay. What I'm going to ask you to do is put your hand up, and I'll come to them, but there is a couple on here, Sharon, which we will start with. So Andrew Cousins, when clients are successful in applying for loan, is the referral from mentoring back to the LEA to the business advisor who worked with the client? That so we get probably now it'll come in for me to talk about the relationship with the mentoring. So LEAs are listed as the delivery agents under startup loans. So therefore the referral goes back to the LEA to pick up the mentoring. So it doesn't go to the individual if you are an external associate. Hopefully, Andrew, that answers that question. That was William helping me out with my technical difficulty. Actually, sorry, Micah answered that for me. David, I have a client who's looking to become self-employed, but their idea, you've answered that there now, but the existing business, so it's new to them, so they are eligible to apply for the loan, isn't that correct, Sharon?
Yeah. If it's new to them, we want evidence that it's new to them, so there should be a purchase agreement. If they're buying a business and there's a set of accounts, they themselves should be looking at the accounts. Sorry, Pauline, I've lost you. I got you here. They themselves should be looking at the accounts of the business that they're buying, and they need to be satisfied whatever the sale price is, that it's value for money. But it is new to them, so that's where we'll take that on board. But we'll want details of what they're buying, how much they're paying, just doing our due diligence as that individual should do as well.
Okay. Samuel of Banbridge has said here that he had a self-catering business which was declined. Is there a list of ineligible business types, or is it a case by case?
Do you know what? I think Ian dealt with that. I'm not familiar with the whole background, but any grey areas like that, come on and talk to us, and we'll be able to articulate why we can't progress with that. I'm not sure of that full background of that. I wasn't involved in that, Samuel, but that's a grey area. Airbnbs, we've had problems there, and we've had our issues with the Startup Loan Fund, and I know we've had debates, but in those cases where we can't give you a clear answer, we'll find out why we can't progress them. I'm just not sure about that one, Samuel. I apologise, but there's a grey area there. But I know Airbnbs is definitely a grey area. So please bear with me. We can maybe feel free to give us a ring later on that, Samuel, and I'll talk to Ian and maybe explain to you the rationale behind that decision, if that's okay.
Yeah, I was going to say that there's maybe another reason, not just what the business idea was, why it was client. So
But I know there's an inverted commas, there's something. Another thing, folks, just I think I'm working at one. I'm not sure what region it is. A client is applying for a loan and is going to do adaptations to the house for the business. They are saying no to me, and I have to go back about that. But I've come across that before. So they believe, say you're living in a house and part of your house is going to be your business, and you're going to do renovations to that house for the business. We can't help you. But if you want to put a unit within planning permission within the criteria, which is 3 to 4 something meters, we will. And we had a situation like that in Enniskillen. The guy was leasing the premises. He was going to go in to renovate the premises. And we said, no, we won't lend you the money. But if you want to get a unit and put it outside the premises, we will. So that's the challenges that we face on occasions to keep within the criteria. But again, case by case.
okay, Carrie has asked, is there a minimum personal investment which is preferred, such as 10% of borrowing, etc.?
Well, that again is a grey area. We asked for some sort of contribution. Why should we take all the risk here? Again, it depends on the proposition and on the amount. Now, if someone was looking for £25,000 and wasn't putting a penny into it, we'd have a question mark there. Why should we take this risk? What's your risk here? So we would normally say, well, we would like some evidence of contribution, and 10% is a good figure. But again, it's a case-by-case business. Again, it's about the proposition. What is the risk element here? Is it high risk? What is the qualifications of the individual? There's none of these black and white, or very few of them black and white. But we will work again with the client and the advisor to try and come up with something that's acceptable. But again, it's down. If someone was going to borrow £25,000, surely they should be putting something like that in themselves. Now, it's not in black and white, but there's nothing. There's a few things that aren't black and white. When we go to apply for these loans, they could come back and say, no, they really should be demonstrating some commitment then there themselves. I know in the bank, when I worked in it, you could have been asking for 25-30% of a personal contribution, and then more recent, it was 50% of contribution. So we want to be fair to the individual. If the proposition is good and all other areas are good, we will be able to negotiate, but again, case by case.
Franchises, are franchises included?
Yes. Again, that is something that it depends on the franchise. We've been able to support, I think, franchises. I haven't come across an awful lot of them. And when we do, we liaise directly with the UK just to ensure that they're happy. Again, it depends on the type of franchise.
Okay, Andrew has asked, do startup loans use the earning before interest and tax and depreciation formula?
EBITDA.
Yeah.
Yeah.
Do you use that, and can they get?
That's the one I was saying, that when we are looking at the trading profit equals net plus depreciation plus interest paid and very little amortization. But that's what we do. We look at the EBITDA.
Yeah.
And that's what tells us if we can repay the loan and the drawings.
Right. Okay. And so is it possible to get this formula?
I've given it on that. I've given what is usually, you can go into a complex set of accounts, but normally we're doing our cash flow projections and we're taking that EBITDA from the cash flow projections, the trading profit and loss account. So we look at the net profit, add back the interest and the depreciation. And because it's a new startup, there's no amortization. So that's the figure that we take, and we take 10% of that. Does that pay back the loan, and does that pay back the drawings? And when we're looking at the drawings, we're also looking at the personal survival budget. Is those drawings sufficient to repay the person's expenses? You know, if they have a mortgage and everything else, and that's their only income. Okay. So all cross-referenced and everything.
Yeah, Robbie, you have your hand up. Do you want to unmute your mic there and ask your question, or?
Yeah, Pauline. Sharon, just to ask about, have you ever had any Sharia compliant loans? That's something I've encountered. Sharia compliant loans. So like Islamic sort of.
No, Robbie.
Okay.
Is that normal? Armo usually give us our fair share. Isn't it, Armo? No, I haven't. I haven't come across that. And please let me know when you get one. I'll be on holiday. What is that?
What's it?
What is that? Sharia
Sharia
compliance?
compliant. So, I mean, I don't want to sort of say things that I'm, sort of giving out fake news or whatever, but I believe it's against Sharia law to have interest on loans, so they can't pay back loans with interest on them. So whenever I have had a few clients coming through, I've Googled it, and there's like Islamic finance, and there is on the startup loans website, there is a Sharia compliant loan. I don't know how else to sort of describe it, but Sharia compliant finance, it says. And yeah, it's about trying to obviously provide a product to those people. So I'm not entirely sure how that works in terms of interest and paying back interest, but I just wonder if everyone's gone through.
I would say that, when you apply for a loan on the system, they do direct them. Say if you had armed forces background, they sometimes send it to a different delivery agent than us, and probably those Sharia compliance loans wouldn't be directed to us because we can't facilitate them. All our products have interest rates of 6%, 6.1 APR. And when we analyse the application, it goes then to another delivery partner who send the letters of offer, who monitor the repayment, who do all the finance. We're only assessing the loan here in Limavady. And we're making the recommendation to the underwriter, be it declined or approved, and then over a certain level they verify our recommendation if it's to be approved. So we haven't hit that, Robbie, and I hope and pray we don't, because I don't know how we deal with it. But I think it's outside our remit.
Yeah, well, it is on the Startup Loans website, and then it's connected through to the British Bank Business Bank.
And they probably send them to another department that deals with that, but they don't send them to Limavady, thankfully.
Okay, no worries. I think it's going to I think they do profit sharing rather than interest repayment. I think that's the way they get around it. There's some sort of profit sharing agreement there, but no, it's grand. I was just wondering because
that's going to we're just very simple here in Limavady. We look at the application. Hopefully it's a go for a program application, but a go for a cash flow projection. Nothing complicated, and all those add-ons on our checklist. And if you get that, we class it as oven ready. And I see Jarlath in the background, and Jarlath is our top performer getting oven ready applications. And hopefully Jarlath will be able to support us that when we get those applications that don't have an adverse credit background, we're able to turn those around very quickly, folks. The problem is when people put in applications, we're going back and forward. Will you give us a CV? Will you give us this? Will you give us that? That really takes up an awful lot of time. And that's where we need you behind us to share, even with that wee checklist, say, this is what they're going to be asking you for. And it'll really be helpful to them and to yourselves if we're able to get through it and get this loan approved, and then the mentoring can come back here. If the agency has done the hard work to start with, the mentoring should be a penalty kick. And like that to me is a brilliant opportunity, folks, for you to get that, because if you already know the business, the mentoring should not be an issue, and you know the individual.
Yeah, so I'm just going to cut on here because I am conscious of time. We have invited Jarlath along today. I'm going to hand over to Jarlath in about 2 minutes, 2 seconds even. And it's just really what Jarlath is going to do is he's going to give his sort of experience on delivering on startup loans. As Sharon has said, there's not as many as we would hope throughout the network who are encouraging if a financial addition is required for the business startup loans. There seems to be a disengagement from the LEA to the startup loans fund. So Jarlath, I'm going to hand over to you now just to give your sort of view, how you identify somebody, and just your views on startup loans and the processes that you go through. Are you there?
Yeah, no problem, Pauline. Hopefully now I'm not going to repeat anything that's been previously said. So sorry I'm joining late, but I'm in the wilds here today. We don't even have electric. I thought I'd no broadband, no electric, so that's why I have no broadband. So sorry everybody, but I'm on my mobile phone doing this. But no, Pauline, as regards, like there's no secret formula to what I do to get loan inquiries. I normally find that where I'm usually getting the information that lets me see who I'm going to be chasing up, if you want to call it that, is genuinely at my lead-in stage. Whenever we're filling in our paperwork and somebody's telling you how much they believe it's going to cost to set up their business and whether they're going to do it out of their own money or potentially borrow funds, at that stage, I'm already earmarking the clients who I'm starting to then instruct to go and get credit checks done. And Sharon, I know you'll appreciate this because we've been past with a good few number of clients who you believe are going to be loan ready, and you do all the work with them to then find out Sharon comes back and go, they failed the credit check because they've judgments against them the length of your two arms. So normally, even at that lead-in stage, if someone is identifying to me that there's a startup capital requirement, at that stage, I would be singing the praises of the loans, letting them know how accessible it is in terms of any other financial lenders. And then at that stage, advising the client to go to either Credit Score or Experian and get a copy of their credit report. Because by doing that, it lets me see who the time wasters are, because none of us wants to be time. And that's what your biggest issue is. If you get a client who's failing in that initial credit check, there's no point in getting in till all the detail of doing the paperwork for them. So I would be identifying them then at that stage. And from there on in, genuinely, what I just have a tendency to do is when we identify it at lead-in stage, when I'm then working through the financials with a client, I be building the loan in from the start. So I would be saying, if I done it as a percentage, I'd say 75% of my business plans when I do them have a need for finance in them, where I'm usually identifying that it's hopefully going to be the startup loans, or in some instances, they're maybe going to go to their credit union or bank or a family member's lend them money. But for those then that I would be converting across, I'd say at the minute somewhere in around about 30-40% of my startups every month would be actually startup loan clients. And it would be as high as that. I know you know at the minute, Sharon, there's probably a good few sitting at the inquiry stages from last week. So like it goes through times, because the thing that we obviously get to find out is when the client comes back and they're choosing their credit score and their credit checks, it takes a period of time for them maybe to clear up some of the misdemeanors. So they're normally comebacks. Well, of clients that I have dealt with maybe tail end of last summer that are only capable and allowed to apply for finance now. So like, Pauline, as regards whenever me and you had chatted about this and what I'm doing, I don't perceive it to be any different. I'm just at the initial stages, digging out and finding from the clients who has got a financial requirement within their business. And at that stage, I'll be honest with you, as a complete selling pitch, what I have is I have typical borrowed amounts of figures sitting beside me, the likes of how much the repayments will be on 5 grand, 7.5 and 10. Because a lot of them, as you're aware, Sharon, is a lot of clients are in around that 7.5 to 10 grand mark.
Yeah.
And I find that if you're sitting with the figures in front of you and you're breaking that down into a weekly or monthly repayment, that nearly sells itself to the client. And by the time nearly that your lead-in assessment phone call is finished, the client's away at that stage starting their inquiry with the startup loans company. So, and that's as simple and as black and white as I do it, because nobody wants to put in hours and hours of time. And as you have said there, Sharon, it's a complete penalty kick, because you've done all the work with a client usually in doing their business plan, their cash flows and all that. So their mentoring becomes very easily. And to me, as a self-employed person, it's nice to be getting 3-4 approvals in a month that are loans as well. But it's a nice payment for the mentoring as well. So to me, it's So I don't know if anybody has any questions they'd like to ask me about. There's no secret to what I do. I gladly have one-to-ones and chat to anybody about how they perceive that I'm different. But I just think it's that initial bit of information. I always am aware what the borrowing rates are, because it's always the same, obviously. And you're sitting with key headline figures. And usually a client will say to you, I'm going to go away and check that off with my local credit union. And 100% of the time, they're always going to back and tell you that it's more expensive to borrow off any other lender. And then I'm building it in.
We have repayment tables there. If anybody wants, we can send a repayment. Sorry, Jared. If anybody wants it, I'll email it to them. Sorry.
I would find that very helpful, Sharon, because I know that to me is the bit that sells it. If a client's on and I'm telling them, just as a real rounded figure, I'm saying to them, for every 5 grand you borrow, it's costing you about £95 a month to repay over a 5-year term. When they hear that, they're automatically in their head breaking that down into, oh, that's about £28 a week. And all of a sudden they're going, oh, that's 1 extra treatment or 2 extra hours of work, and that's going to pay my finance. And they realise how much cash flow is freeing up for them for a rainy day, that maybe they're putting their life savings into their business, where all of a sudden they realise I could actually borrow this money relatively cheaply. So I think it's those headline figures of how much the loan is costing, I believe, to be good. But to save my time and the client's time, I always, because Sharon, you know, I would have been down the path with a lot of clients where we would have got negative credit scores and stuff like that, and we get into handlings with them. So at a lead-in stage, I always would be instructing and advising the client at that point to go off and get a credit check done to see if they're credit ready.
Yeah, that's a brilliant tip. Yeah, absolutely. And we've talked about that. But yeah, excellent.
Thank you, Jarlath. Look, I'm just conscious of time, so I am going to, because a lot of people's having to leave there because they've all their appointments and stuff. So just to recap for you, the presentation, that checklist, Sharon, if you want to send the repayment budget, that would be great as well. We can send that, and some people are looking for a copy of the personal allowance budget as well. I don't know if that can go out, Sharon, or if that's
what do you mean, personal allowance tax?
Well, I think you made mention of the, you know, where they have to call out the personal budget one.
Personal survival budget, absolutely. Yeah. I can just drop me an email, whatever you want, and if I can deliver it, be it the checklist, the personal survival budget, and the repayment tables, very useful to have beside you doing an interview, no problem.
So I think probably for the purpose of today was to give you a little bit more background into startup loans and stuff like that, but also to see it as an offering, another offering to clients that come to you through the Go For It program, where Jarlath has said there he identifies very early on whether they're going to need additional financial support. And they have been rejected by their bank. You know, all those avenues have been turned down for them. But look, I'm going to end the recording here now. As I say, you'll get an email with me once we get the recording all sorted. We'll send everything out. And as Sharon said, both her and Ian's contact details are on the presentation. And it is, if it's startup loans related, please go to Sharon or Ian. I don't work on startup loans. I have very minimal knowledge. So go to Sharon or Ian for answers in terms of if you've come across somebody who you foresee would be eligible to apply for the loan. Okay then.
Thank you, Pauline. Thank you, everybody.
Thank you, Jarlath, as well.
Thank you. Thank you.
Not a problem.